consumption side seeing a pickup, and that obviously means in terms of the packaging seeing a pickup as well. What is the trend that Uflex is seeing? Where how is their growth shaping up? Let's bring on board Rajesh Bhatia, Group CFO of the company right now. Mr. Bhatia, very good afternoon. Thank you so much for joining in with us. And let's start with the trends right now. Consumption companies are highlighting how rural has started seeing some bit of a green shoot, some bit of a recovery, at least coming in from June. How are you seeing an uptick in terms of the packaging in those sides? What are the demand trends that you are seeing on ground right now?
I think the demand for the packaging will remain very robust, both in India as well as internationally. So, on the demand side, we have no hiccups on this side. There's been some extra capacity that, which came on stream, especially in India, where, the pricing has seen a bit of a degrowth. But on the demand side, no issues at all. I think in India, we'll always keep on having a double-digit growth, and the West and Europe as well as Americas, which are the large markets for us, are also seeing a substantial increase in growth, at least in the last 3 to 6 months. So we very upbeat on the growth aspects.
Okay, but in terms of the various segments that you cater to and the various kinds of clients and geographies, could you break it down for us in terms of where you're seeing maximum growth or which are the pockets which are still a bit sluggish?
I think the pocket which is sluggish is only Europe as of now. Okay. America has come back very strongly, and there, whatever is the total plant capacity, we are able to sell much more than that currently. So we have to, supply it from our other facilities in Nigeria, Egypt, or India, because the combined capacity there is falling short of our total volume that we're selling in that market. The Europe has been impacted by a very high energy transition when the Ukraine war happened, and that has seen some of the degrowth as the households adjust their budgets to align with the much higher, at least three times higher energy prices what they had to bear, and that alignment led to a slightly fall in consumption, including of the food products, and that's impacted the volume. So those volumes have come back, but again, not the kind of the recovery that we've seen in the North America market. Uh, Nigeria, again, we this year we have had about more than 25% volume growth. So that's another country where we will definitely see substantial volume growth in the current year. The rest in India currently we have capacity available, but as I said, the market dynamics is today that there is a oversupply situation. So the volumes have taken a hit in the Indian market as well when I compare that with the last couple of years and all that. So there's a headroom to grow volumes on an overall company basis by at least between 20 to 25% from the existing capacity itself.
You're saying you are expecting a 20-25% volume growth in FY25, is that correct?
No, I'm not saying that we will achieve all of that in FY25. All that I'm saying is vis-a-vis our capacity today and vis-a-vis what we produced in FY24, we still have a headroom to produce about 20 to 25% more. And that's where we reach the peak of our capacity. We've achieved that in the past. We've operated almost all our facilities at 100 or maybe a little over 100% capacity levels. And so that's the headroom available. We'll be able to do much better than what we did in
Mm-hmm.
FY24 in FY25. Out of the balance 22 to 25%, how much we are able to recoup in FY25, I think still early days in FY25. But surely,
Mm-hmm.
we have that in mind that, we have a headroom available to increase that. And that means
Sure.
also top line of say about another 1200 to 1500 odd crores which can come our way from the existing capacity.
Okay, so I understand that when the capacities do get engaged, there could be that 1200, 1500 crore uptick that might come. But just wanted to get a better sense, Mr. Bhatia, as far as the various tailwinds and headwinds you talked about, how Europe is a bit sluggish, India has the capacity available, but on the other hand, Mexico, Nigeria, these are some of the businesses which are doing quite well. If I put everything together, what kind of volume growth and revenue growth should we envisage in FY25?
I think volume growth we will see at least about on a total product mix basis, we'll see about 12 to 15% volume growth for sure.
So
Now that volume growth is a combination of what the existing capacities are, and that combination, there is additional capacities which have come into play towards the fag end of FY24. So all those put together will give us at least that much of a volume growth for sure.
Right, and sir, if you could just highlight in terms of one more thing, just pointing out on that, and is in terms of the operating margins, where do we expect that in FY25? Could we expect the 12 to 13% range again? As well as in terms of revenue, are you looking at or targeting a number? Could we expect, 1,500 crores or more than that in FY25?
So I think in terms of the operational EBITDA margins, FY24 we achieved 11.7%. So definitely we need to better that, and we will better that in the current financial year, given that the packaging films business is surely going to improve in FY25. So if we target at about 13% blended margin is what our target is for the year. In terms of the revenue growth, this year we had about 13,500 odd crores of the top line. So if we look at about 12 to 15% increase over there with a higher EBITDA margin, I think that's what the number, we are looking at for FY25.
Surely a
And
13%.
FY20,
Right, sir, right. Please go on.
our operation EBITDA, for sure, we will have, you know, little over 2,000 crores for the whole of FY25.
Okay, little over 2,000 crores by FY26 is what we could expect. The EBITDA 13% blended FY25 and blended margin surely at around 13% is what we could expect. Thank you so much, Mr. Bhatia, for joining in with us and giving us more insights about the company and the growth outlook that's happening there. But on